Ladies and gentlemen, we're coming to you live from a storm this evening. It's 6 o'clock in London. It's actually 1 p.m. No, indeed, it's 2 p.m. in New York. Who knows where we are in the world because of daylight savings time actually this week. It should be 1 a.m. in Hong Kong. It should be 3 a.m. in Sydney, but maybe they moved, maybe they didn't. I don't really know at the moment. All I know is it's 2 o'clock in Providenciales in the Turks and Caicos Islands, where we seem to be enjoying or enduring the tail end of Storm Wilma. So, ladies and gentlemen, I'm sure you're all having zero sympathy, particularly our many viewers from the Valerian block out there in the UK, where I believe the weather is much worse still. Anyway, greetings, good morning, good afternoon, good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID Livestream, Series 8, Episode 2, that's 44 if you're doing your 6 times table, starts here. Been another very, very exciting week in Exchange Invest. Of course, we've had some spectacular results during the course of the last 7 days. Most notably, I think, the Intercontinental Exchange, they're hugely on plan, as always. They even allowed themselves a moment of suggesting that their results were rather encouraging when they offer a positive adjective in the course of their description. That suggests it's going to be a very good set of results indeed, as indeed they were. Our guest today is Peter Lenardos. The C-suite speaks, ladies and gentlemen, and that's the C-suite across many different functions within the parish. Peter K. Lenardos, my good friend, is CFO of global market making and prop trading firm OSTC Group Holdings. Peter also sits on the board of both the OSTC Group Holdings and New York Stock Exchange listed SPAC, the World Quantum Growth Acquisition Corporation, which is chaired by none other than former London Stock Exchange Group CEO Xavier Rolet. Previously, Peter served as CFO and later CEO of Cinnober Financial Technology AB in Stockholm, Sweden. Prior to Cinnober, Peter was in investment banking from 2001 to 2018 and became well known for his views on the global market infrastructure sector. So, Peter, greetings. Good evening. I'm here in rainy Turks and Caicos, beautiful by nature, Providenciales. Where in the world are you today?
Well, good evening from London. It is actually drier here than where you're at, but a chilly and dark evening. Nonetheless, but despite the very American accent, I have called various places in the UK and EU home for the past 17 years. So I'm thrilled to be talking to you this evening from London. Where's my home? Where's my home?
Excellent. So, Peter, you've had quite the career of it. How did you get to be involved in financial markets in the first place?
You know, I mean, I'm going to tell you my first job out of getting I've got 3 degrees, and after getting my first one, my bachelor's degree in accounting from the University of Notre Dame outside of Chicago, I was an auditor for the now defunct Arthur Andersen, and I started auditing capital markets groups, and it never stopped from there. So I realized very quickly that auditing was looking in the rearview mirror, and while they do provide a very important service, auditing and looking backwards certainly wasn't for me. So I went on to get a master's degree in finance and quickly shifted to investment banking, where I did M&A and capital raising, equity research, and corporate broking over the ensuing 17 years in both the US and UK, and became really ensconced in the capital markets arena, specifically market infrastructure groups and asset managers. And it's something that when I made the jump to the C-suite in 2018, my trajectory continued in that niche that I carved out for myself. First, by working for Cinnober, which provided technology to the world's largest exchange groups, and our motto was powering the world's financial markets. We did both trading and clearing technology, and we're the first provider of real-time clearing anywhere. Had clients in 6 continents. I then restructured that business, sold it to NASDAQ for them to integrate into their market technology division. I went off, got further education, and was hired then by Lee Hodgkinson, who is the CEO of OSTC, to help OSTC not only expand its products but grow on a global basis as well. So it has been an exciting career, but I'm very pleased to be in a sector that I think I've developed a lot of strong relationships in and understand quite well.
What an interesting career altogether. So tell me a little bit. I mean, you came out of the analyst side, and analysis has been somewhat in the limelight in recent years. I mean, we had MiFID-2, this very interesting piece of legislation. How do you view the analysis business now you've been out of it for a few years?
You know, before I went into it, I was very intrigued by the research analysis. I wondered who were these gurus who got all this fame and fortune for making spectacularly wrong calls usually. Need I even reference, you know, the dot-com bubble, the global financial crisis. Now everyone claims to have called it, but I don't remember too many people pounding the table at the time. I quickly got in there and realized that analysts were quite overpaid, very large egos, produced very low quality work, and were consensus hugging. You know, you can make fun of an asset manager for hugging the benchmark, so to say, but I found analysis to be quite underwhelming and not challenging. And I remember I managed a team on 3 different continents as we were covering global exchanges. And I said that our job was quite easy. We just needed to know more and work harder than the competition. And you could say, you know, that's an easy task. But while we worked exceptionally hard, I think we got ranked very well in a very short period of time. And, you know, the thing about research that surprised me is that it's consistently wrong, consistently late, consistently consensus, and consistently positive as well. You know, at the beginning of the year, we're almost at the new year, just 7-8 weeks away. You know, we'll get a lot of calls on where the market's going in the next year. And one thing that I can tell you is that all of those will be wrong and shortly be forgotten about. Now, MiFID-2, I'm never a fan of overregulation. I like the light touch mode of regulation, but MiFID-2 had one good thing in it, and it decoupled trading and the payment of research. And rarely does regulation put something right, but here this was a good move. This was a good move in my view, because it made the buy side pay for the value of what they thought research was worth. And in the end, we found that value was not much at all. So in my opinion, a lot of people say that the market might be underbroked. And I think for active stock pickers, that's a very good thing. More investment opportunities exist because of a lack of a tight consensus. So in the end here, you know, investment banks are known for high fees and toxic cultures, and the market is fixing both by bringing fees down. MiFID-2 is helping with that and creating rewarding career alternatives to a career in banking. So while I was in investment banking for 17 years, you know, from 2001 through the beginning of 2018, I think their glory years are surely in their rearview mirrors. As fees come down, the hunt for talent becomes harder, the regulator becomes more demanding, and regulatory capital requirements increase across the board. So I'm glad I did it. I'm glad I saw what it was for what it was, but glad to have that in my rearview mirror. And I think the C-suite, you know, where you actually add value and help, you know, you look after all stakeholders and help create shareholder value and drive the direction and strategy of a firm is much more rewarding for me.
Fascinating, really fascinating altogether. As you might gather at this point in time, I am literally stuck in a rainstorm at the moment, which is why I'm getting increasingly soggy as this whole event goes on. It's quite spectacular out there, actually, beyond the pantry. Thank you for all the great comments. Evening all, evening to you, Les Calvert. Great to see you. Good evening, Craig Richardson. Lovely to see you on the show as well. I do believe Peter Secon's there. Good evening, Peter Secon. Various of the Valerian Group shareholders in. Evening, everyone. Good to see you, Simon Huckle. Thank you very much for joining the program. Oh, what a great start to everything, albeit perhaps not quite from the production values of where we wanted to be showing. David Frugget, when does it start? Is that the storm? Clearly it has started already. And I think we can safely say this broadcast is underway, even if it's going to involve me having to be taken off and probably have towels thrown over me like a boxer at the end of the 15 rounds here, not because of anything that is being landed upon me by Peter Lenardos, our guest today. But it's very interesting, Peter. I mean, very cynical about where the actual analysis business has gone. How do you think analysis could get its mojo back and really start to offer better value to the client?
Sure. And here's what I think, Patrick. Research was not fit for purpose. It was not independent, despite banks investing millions and millions in ensuring regulators that Chinese walls exist, and that their research is very independent. We can't have, I remember back when I was in grad school, now this was 20 years ago, and a sell rating came out on a stock, and it was the top story that an analyst would be so bold because it was determined at the time that 98% of calls were either positive or neutral. Now that can't be, as well as I, that even in sectors, some stocks underperform, some stocks outperform. And what I think has been really fascinating in the past few years is these really specialist providers of a short selling research. Now, do I think they behaved in the most ethical manners? Of course I don't. They would buy positions, they would publish a juicy piece of research, the stock would dive 20%, and then they would cover their shorts as everyone else was piling in. But at the same time, why this research was so widely followed, because it was so anti-consensus and so provocative in its nature. Some of it I read was very well researched, and they actually didn't take the annual report of a company or the website and regurgitate it. They didn't take management's words and regurgitate it. They did their own analysis, and in some companies brought companies rightly to their knees. So I think here what we need to do is say that where analysis could get its mojo back is by sitting there saying, if they're going to add nothing to a pool of 30 analysts, the 31st piece of positive research is going to add absolutely no value. So that is where I think that being more selective, and one thing, Patrick, that I respect about you is that you're opinionated. And I think that opinions matter. How many times have I read a piece of research and I just can't determine where the opinion of the analysis is? And that's what the market is looking for here. Something that is going to lead the market in a certain direction. Let's talk about one company that I followed quite closely, and you had referenced it at the beginning of your talk, Patrick, with the London Stock Exchange Group. I remember when they bought 50% of FTSE, I wrote the wrong note. And I said that they already had control of this group, but I didn't see what the remaining 50% brought. But what changed it for me is when under Xavier Rolet's CEOship, when he bought LCH ClearNet. And that's when I said that this was a company, when I first started talking about it, all anyone wanted to talk about was their declining market share. Now, not one person cares what their market share is in UK equities, because the business under his CEOship was so greatly diversified. So, it's about finding those things. And I was very proud at the time. And again, I've made plenty of wrong calls, but that was a call in noticing when the shares were at the nine quid level, and I think they're in the 70s now, that this was a moment to buy the shares, that what he was doing was buying this asset that had enormous strategic value for a very cheap price, was revolutionary for the group. And I think he went about and changed that business quite spectacularly. If you look at the group now, though, it leaves me quite confused. It's still a consensus buy, even though the shares, almost hit 100 quid, and now we're down around the 70, 75 mark. And they overpaid for a low growth asset. And what the LSEG group is, in my opinion now, is a consensus buy with shares underperforming. And the only thing that's exciting about it is the integration story. That's not a strategy for me. If you want to see companies with sound strategies that are brilliantly executing, look at ICE, look at NASDAQ. Absolutely spectacular in how they set out their strategies and how they execute them.
That's a brilliant point and a really, really interesting one, Peter. But let me put that back to you, which is, you mentioned, indeed, when Xavier Rolet took over, it was almost as if nobody understood the stock amongst the analyst community, and there was a lot of misgiving. And I think actually nobody was optimistic about that purchase of the other 50% of FTSE. I think I was the only person on social media who made a positive comment at that time, because I could see where it was going. We all make wrong calls. That's not a problem. I'm not worried about that. It's really, really lovely when you get an analyst who admits they made a wrong call. That's something that is very, very rare in humankind. But what is fascinating is then we got to this hiatus where by the late Xavier period, whatever Xavier would have done, everybody still said, well, the stock's going to go up. And that sort of carried on into the current market. Now, I don't really want to get bogged down in LSEG, but let's contrast that with, you mentioned two really well-run companies.
Yeah.
Totally agree with you. NASDAQ, great strategy, very exciting, executing on it. Intercontinental Exchange, perpetually,
Fantastic.
I mean, exercise in motion of the beauty of how they actually manage to make
Agreed.
things work.
Couldn't agree more.
Yet, the Intercontinental Exchange keeps going out there and taking risks. And that actually seems to me to always appall the analyst community, because they really love CME, which is basically a boring monopolist, which may or may not be executing that well, certainly doesn't have a vision thing going so far as we can see. And yet the analysts all love it. And Intercontinental Exchange, they go, okay, we're off to buy into Interactive Data Corporation, and the analysts are appalled. They go into the mortgage business.
I would agree. I would agree, and it's very unusual, because you would think American analysts would be, more into risk taking, whereas you're right. At the end of the Rolet tenure, it was everything that he touched turned into gold, and even the ill-fated LSE Deutsche Börse deal. I remember both shares were up 12% on the day, as the market cheered the creation of a so-called European champion and massive cost synergies that were going to come. And obviously, we know how that deal ended. The deal did not complete, and two CEOs ended up leaving. But no, Jeff Sprecher has done numerous things correct, and the one thing that he's always been is ahead of the game. And if you look at even what he's doing in the mortgage industry now, the mortgage industry is beset with too much paperwork and too many people. And he is taking that and he is automating that, making it more efficient. And I think it's, he's launching his own indices, his own information on all of that. And he's going to go ahead and revolutionize that market like he started to do with the power market back at the beginning of the 2000s here. So no, it is quite bizarre, I would agree, that he thinks of these out-of-the-box acquisitions, and the market reacts in horror. But you want to know something? When he did NYSE Euronext, the market sat there and said, and I was one of these people, and I was wrong. The market sat there and said, okay, you want life, we get that. You don't want Euronext, we get that. Why the hell do you want NYSE Group? And from when he announced that acquisition in December to the following December, his shares were up 100%. And we're producing a piece of research that was entitled, I Was Wrong. He took risks there. He took something, and when he bid for NYSE Euronext the first time with NASDAQ, he's flat out said, I don't want NYSE. It's an asset I don't want. And he changed his mind, and he realized that he could be wrong too. And I think that's a very good sign of a well-respected leader like he is. And he's done an absolutely spectacular job with NYSE Euronext, giving the Europeans back Euronext. And, under Euronext has, I think, surprised a lot of us in how successful it's been sweeping up assets and taking risks. But then again, their partner seems to be the European Commission. So I think what Rolet does is Sprecher does is he takes fantastic risks. And even Adina Friedman, if you look at how she manages her product portfolio, she will aggressively acquire, including acquiring that company in Canada for eye-watering multiples, and then she'll aggressively trim her product portfolio at the same time. So I think that is what you'd want to see a CEO doing, to sit there and say that sometimes acquisitions don't work, that we need to dispose of them. It doesn't mean we carry the bag. Sometimes we need to rationalize our product portfolio. So I think those are two CEOs who are doing a fantastic job. But let me just talk about another exchange that doesn't get a lot of airtime here, and that's CBOE, or CBO now, run by Ed Tilley. And I think what Ed is doing here, that's one to watch. He's wisely acquiring assets to help diversify and grow his business. And I think that's another one that likes to fly under the radar and is going to surprise a lot of people with how diversified this business is and how he's gotten his hands into a lot of different arena, everything from crypto to European options and obviously the founder of the VIX. But what SIBO is not, it's not a one-trick pony. That is a well-diversified business. And I remember when they acquired BATS, that was another one where they took a very big risk. And I thought, how much life can they get from a dead asset? BATS was very far from dead and helped revolutionize SIBO's business. So there are some exciting stories here. You look at CME, the one positive thing that I could say about CME is they have a very good business model, but I don't know of relying on and they've got a fantastic lobbying campaign in Washington, D.C., but I don't know if those are viable long-term business strategies. Deutsche Börse here on the European continent, if someone could please tell me what their strategy is, I'm all ears. It's a great business model. It's well diversified. I just think there's a lot more exciting things in the sector.
Yes, it's very interesting, isn't it? I mean, you touched upon Deutsche Börse there, and I think we're at the point where in the past you couldn't possibly miss the chief executive of Deutsche Börse Group through various incarnations. Nowadays, we can't even remember his name. Such a challenge. Right. I mean, it is quite incredible. He's so low profile.
And unfortunately, the same could be said about the CEO of the London Stock Exchange Group. Xavier Rolet did many good things. Obviously, was not perfect, but what he was Mr. UK PLC, and that is to be applauded. He is not British by birth. He's obviously French, but in the end, he got his KBE for services to the financial services sector. And what he did is every day he put the home country of the UK front and center and pushed his company amongst politicians, amongst the press, and that is what a fantastic CEO does. And when we went into this pandemic now about 18 months ago, I will tell you the one CEO who was out there consistently, that was Adina Friedman. Fantastic job sitting there reassuring everyone that just because there's hyper volatility in the market, she said, we're not going to shut these markets down. We need to prove that we can handle this volatility and we can stay open through good times and bad times. And fantastic job for her for taking that mantle, transitioning her business to entirely work from home, as all of our businesses did. But obviously theirs is quite a crucial business. And at the same time, leading the industry, or as the parish that you like to call it, on the way forward. So, there are some remarkable leaders in the sector here. And, I'm going to have to say that a lot of them are going to come currently from the U.S., Sprecher from ICE, Adina from NASDAQ, and Ed Tilley from SIBO, I think are all doing the right things.
Well, I think it's really interesting in what you say, and certainly we value your input. It's a very interesting discussion. Of course, you're not the first analyst to go into the C-suite, and I suppose really the prototype in the exchange parish was obviously your fellow Peter Randall, who made the jump into running Internet and all sorts of other businesses and really being one of the original MTF pioneers. But what you say about, Adina Friedman leading for the course of the last 18 months, absolutely true. And she stitched together the deal for Verifin in wherever that was, Newfoundland in Canada. Absolutely phenomenal deals. But as you say, is not averse to selling the odd thing as they go along as well. And let me just say hello to Anmol Preet. Thank you very much for your message. It's great to hear from you. Now, this is the C-Suite Speaks, ladies and gentlemen, as I come to you from a very, very stormy Providenciales in the beautiful by nature Turks and Caicos, which will be a lot more green tomorrow than it was even as the dawn broke this morning, once this rain passes over. If you've got a question for Peter Lenardos, I'm getting my Peters mixed up. You got a question for Peter Lenardos? Peter Randall was, 40 episodes ago? Drop us a message in social media. We'd love to hear from you, ladies and gentlemen. He's got a broad-based knowledge all the way across the exchange business, analysis, tech vending, and indeed most recently prop trading, which we might even get onto in a moment. So drop us a question here. We're talking to the C-suite, to my good friend Peter Lenardos, who's coming to us from London this evening. Now, Peter, interesting. You're talking about, people changing their opinions and stuff. I'm interested to get your take on one thing. Just recently, only a couple of years back, Jeff Sprecher bought a very significant holding in Euroclear, which is the organization that few people know about, but in the market structure, it's huge because obviously they're one of the massive duopoly of clearing and settlement of equities in this part of, or at least in Europe. What do you think about that? Because Jeff he bought his way up to basically 10%. And then all of a sudden, last quarterly call 3 months ago, there was a sort of a hint of it's for sale. And we find it being bought by private equity just before the last set of results. Very interesting move to turn around so quickly. What did you think?
He's not a minority buyer. That's what I think. I think it was very smart to get in there, acquire 10%, get a seat on the board, take a look under the hood, and make a realistic determination if he could increase his holding and enact true change here. But if you look at how he runs his businesses very successfully, obviously, I don't think he's a minority holder. And I think, when he, he sacrificed Euronext in order to get European Commission clearance for his purchase of NYSE Euronext, but I don't think Euronext was an asset that he wanted either. If you look at him, I would say that he, as most of us do, get frustrated by the bureaucracy and the administration and the slowness, if you will, of Europe. And I think that Euroclear, as its name would say, is a European asset. So I think he might have even taken his 10% stake, if you look at it at the time, as others were acquiring stakes, such as the London Stock Exchange Group. And maybe he did it to get a foothold in there, take his 10% stake, and take it as a blocking stake as well. Who knows if his intentions were to get majority control, if to use that as a blocking stake. But I think that it served its purpose for him, and now he's moved on. And as as I sit there and think, when I look at ICE, I don't think of them as a holder of minority stakes. I think of them as controllers of companies who are master operators. And whatever Jeff's intentions were to block someone else or to see if they truly could get majority control, it served its purpose and he moved on. And
well, certainly the one thing I have to say there is, I don't think anybody would be terribly shocked at the idea that an investor might see an opportunity in an organization which has 7 tiers of Belgian middle management. There just might be a rationalization possibility there, which clearly could have been attractive to Jeff Sprecher, the international rationalizer in chief of Parish Assets. Very interesting what you say about SIBO, because in SIBO last week, we saw a set of results which really were not bad. They were pretty good.
Right.
It also demonstrated to me what's wrong with the analysis cadre, because we got the news SIBO beats estimates, but on the other hand, the profits were up 9%, which was only basically half of the profit jump that we saw at NASDAQ or ICE or other places. Now, I'm not criticizing SIBO for that, but it's kind of weird that if you beat your analyst's recommendation or estimate by 1%, that's really, really thrillingly exciting, as opposed to actually delivering alpha, actually going out there and growing. Now, to be fair, that's actually picking more a fight with the analyst cadre and what's going on rather than what's going on at SIBO. Because where I do see you is very, very interesting business. I thought SIBO was horribly overhyped at the point of IPO, and I was the only person who really said, I don't think this stock goes up at the moment. And actually it didn't for about 2 weeks.
But you want to know, can I tell you something?
Tell me.
I remember when I first started covering SIBO, it might have been 6 years ago. I was the only buy recommendation and everyone was a sell. And then
that's what I was going to say. Yeah.
CEO and chairman told me that his stock has been a consistent sell since their IPO and had been up hundreds of percent since its IPO. So what the people couldn't understand about SIBO was that they were institutionalizing an asset class, that being volatility. They created an asset class, but then everyone said that Vol's best days were behind it, and that SIBO was a one-trick pony, that options were unprofitable, and that they couldn't diversify their business. Now, the one thing that I would say about Ed and his team is they don't go out there and they don't thump their chest. They let the markets, the results speak for themselves. This is a business here that has been in transition for years and will continue to be in transition. But what they're doing in terms of launching the European options and getting into crypto, and even partnering with SGX and 7RAGE on the acquisition of trading technologies. This is a business here that is in transition, and they're getting their hands into all the right spots. And it's
And
a lot more diversified than you would think by reading an analyst's sell-side research.
Absolutely, and I think the analysis is still with the O of the original SIBO, and they've totally lost where I think, some of the genius business deals that they've done is how they've managed to buy a load of stuff not very expensively. The bids deal, the original bids deal, where they got into bed with bids as a result of meeting up at a different function entirely, and then finding the opportunity for taking their very, very cheap MTF and moving that into the block trade facility, reducing block trade fees, but at the same time then making a king's ransom compared to the pennies, actually fractions of a penny, that they're making on stock execution. That was genius. Then going in and ultimately buying the Chi-X Asia Pacific assets, which makes them really pretty much the most global stock exchange that's out there in many respects right now.
Way to put it.
In terms of platform. And they've now got the opportunity to pour the asset into, effectively, the block trading asset into the Asia Pacific marketplace, which was the last bastion of Liquidnet's rather tired monopoly. And suddenly you've got a very, very interesting proposition. And the thing I love about what they're doing is each time they're only spending a few $100 million most of the time for what they acquire.
No, I would agree with you on that. So the business is, it's transitioning, and you can see it if you look at the results. The revenue was up, but the EBITDA margin was down. And what does that mean? That they're investing in the business and they're diversifying the business. And as you said, the growth rates weren't as spectacular as someone like a NASDAQ, but at the same time, I would sit there and say that is a business that needed transition. But instead of sitting back and sitting on that VIX machine, which was a cash cow and printed money, they used that cash to reinvest in the business and to diversify the businesses. And you rightly said here, Patrick, it is a very geographically diversified business as well. And I think that he's planted a lot of seeds around the globe, and you're going to see a lot of those start to grow and to pay handsome returns to them.
Certainly, if they can just add a bit of product here and a bit of product there, it becomes a very, very interesting business altogether from what has already been quite fascinating. It looks as if the rain has abated, rather. I'm sorry about my hair. It's doing a bit of a frizz now, and what is basically amounts to humidity central as I'm sitting here in the beautiful by nature Turks and Caicos this evening. I'm off my way back to Europe in a couple of days. We've got Peter Lenardos, the C-Suite Speaks, and we're ranging through an interesting series of topics. We've got something to like to ask Peter. Please drop us a message in the chat wherever you are at the moment, whether you're watching this live on Facebook, LinkedIn, or YouTube. Indeed, if you are watching this subsequently after our live slot, don't forget you can always catch us. And when the curvature of the Earth allows, we're usually at 1 Eastern and 7 p.m. European time, 6 o'clock London time. We're at 6 o'clock London time, 7 p.m. European time this week, of course, going live, but actually we're slightly later in the afternoon. So most people have already lunched in New York as they're watching this at 2:30 in the afternoon. So Peter, let's shift gears slightly and move to something completely different.
Sure.
It's COP26 at the moment, in case it hasn't passed anybody's notice, largely because most of the world's private jets are there so that people can talk about how worried they are about carbon.
That's right.
We have this major league concern about all things, although let's not start to talk about what might be the rather catastrophist error in the more extreme models that seem to be the things that people think are the mainstream outcomes of what's going on. There's certainly a big move. There is a greater desire, he says, speaking from the beautiful by nature Turks and Caicos Islands, for an improvement in our attitudes towards ESG investing. So tell me, Peter, what's your view in terms of what's going on with this whole ESG marketplace?
Oh, I've got views. So I'm glad you brought this up. ESG, there is no doubt here, Patrick, that it is hot and that its intentions are right, but it's way too broad and it needs to be defined. Simply put, Patrick, everything cannot be ESG, and it seems that it is. We've got, environmental issues, social injustices, and, people rightly on some of them are very upset and a stronger ESG rating system, in my opinion, is needed to ensure investors get the positive impact that they're certainly paying for here. The bar of what currently constitutes a good corporate citizen is shockingly low and makes ESG investing misleading. At the core of this problem is ESG ratings, and those are going to be offered by such firms that we all know as MSCI and Dow Jones. So contrary to what almost everyone thinks, most of these ratings have nothing to do with the actual corporate responsibility as it relates to ESG factors. Instead, they measure the degree to which a company's economic value is at risk due to ESG factors. So let me give you a couple quick examples here. If I ask the average person, how would Exxon and BP be rated? That'd be British Petroleum. They would say poorly, but they get average scores from MSCI. And that's because the MSCI ratings see the pollutive behavior that these companies engage in as being managed well or not threatening to the company's financial value. This could be another reason that, believe it or not, Philip Morris has made it into the Dow Jones Sustainability Index. And one of the reasons is that Philip Morris says that it wants to be smoke-free in the next decade. Now, smoke-free means we can all go out and vape, and we can all go out and get lung cancer that way. But we're not going to be smoking a traditional cigarette. So that is why I'm saying that ESG is a very hot area now. And I think what it's going to take is someone to come in and put on very strict rules of what constitutes an effective ESG rating. And even if we break it down, environmental, social, governance, again, three very broad areas that we are trying to loop together. Do we need to be compliant in all three? What if just one? So I think ESG, everyone loves ESG, and everyone by the nature should want to do good. But at the same time, when I come and tell you, and again, I'm not expressing my opinions here, that Exxon and BP get average aggregate scores from MSCI, and that Philip Morris itself was in the Dow Jones Sustainability Index, that should raise great concerns about what we're paying for, what's ESG compliant. And what I'm saying here is that the sector, it desperately needs to be defined. And I'm surprised looking at the ratings companies and looking at the stock exchange groups, some of which own index business, some of which are developing new indices, aren't more active in this area.
Yeah, I mean, it's really, really interesting. Certainly, I have a constant problem with people who issue green bonds, which seem to be taking a very nice, verdant hill that was just minding its own business and being natural. And then they pour 10,000 tons of concrete on it. But they put solar panels on the roof of the 73-story hotel that they built.
That's all that means.
And that's green. That's a green bond.
That's green.
I'm not against the idea of pouring content. I'm not a catastrophist. I'm not in this business of saying that we cannot have economic growth. And I'm certainly far, 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 like you, Peter, from a degrowther. But it strikes me as quite absurd that we've got this amazing fixation of what actually amounts to a green bond. And some of the rules and some of the rationales are moderately bizarre, frankly, as to what can get away with ESG rating.
No, and I would agree. And green bonds is one that I totally forgot about, but those are being issued right, left, and center. And how are we clarifying what is and what is not? Now, listen. Now, I'm saying that I'm a free market advocate, and if no one is going to police what is and what is not a green bond, then everyone should label their bonds as green. And well done for going and pricing those, and probably pricing it at a tight yield as a result. So, no harm to the market here. It just surprises me, and we can get into one other thing that I wanted to talk about, Patrick, that in a world where we see everyone commenting on everything, the whole purpose of this, our talk today, Patrick, was the C-suite speaking. And what the C-suite, I guess we're referring to myself, sometimes should not be speaking, in my opinion. And what we're getting here is the C-suite commenting on everything, even if it's not relative to their underlying business. And that's why it just surprises me that in a world where we want to do the right thing, but more importantly, want to be seen to do the right thing, that some people would utilize these ESG ratings and these green bond offerings that might be fitting the letter of the law, but certainly not the spirit or of the rating agency. Indeed, and, and my viewpoint here is when the C-suite should not be speaking is, I think that all stakeholders, when you're in the C-suite, need to be looked after. But, the primary goal, and this is my opinion, and I know a lot of people will disagree, but the primary goal of sitting in the C-suite should be to create shareholder value. So let's leave politics to politicians unless the matter severely impacts your business, and that's potentially your people, then of course you should have a vested interest. But the world is so polarized at the minute, I simply do not see the need for the C-suite to publicly comment on certain matters. Do what is right, look after all stakeholders, create shareholder value. But some companies are out there socially grandstanding and commenting on issues of the day, and that seems very self-indulgent to me. There's a thing about saying, get on with what we need to do and applaud for yourself, and then keep repeating. And that's kind of the mantra that I take. I don't need someone to tell me that I'm doing a good job. Let the numbers speak for themselves. Let's create shareholder value. Let's look after our stakeholders, but let's just get on with the task at hand.
Yeah, it's very interesting. I mean, discussing the whole business of just making sure that the company runs. And it seems weird to me that we've ended up with this sort of very highly advocatorial, sort of politicized C-suite cast, who are becoming almost as annoying as pop stars when they do the same thing.
I would completely agree. I mean, when an actor goes and tells me his or her political views, I'm watching the actor for their talents on screen, not for their views, and I would completely agree. And we had a lot of politicians, I think, in the last few years, come out with their statements or support certain political candidates, and sorry, not politicians, the C-suite. And at the one time, I'm not saying you should be like a monarch here and totally neutral in every respect, but at the same time, it's okay to have privacy on certain matters and to keep your internal views just that, internal. If it doesn't impact your company, you probably shouldn't be publicly commenting on it.
Yeah, it's very interesting. And obviously it raises a lot of tricky issues for the C-suite, because we do want to see companies being as inclusive as possible. If no other reason, then they make more money that way, actually, from the evidence that we can see. But how do you get around that? I mean, in terms of, should it be mandated? Should it be voluntary? Or should we just simply be trying to nudge people in the right direction?
Maybe we can sit on one thing, is that when it comes to diversity and inclusion. Now, do I need someone to tell me, a foreigner in the UK, although I do have a British passport, and a member of the LGBT community myself, about diversity and inclusion? No, a lot of people say that I'm very direct and very opinionated, and I say I didn't get to this position by being a gay man in the past 20 years, by being silent, and every time I was made fun of or shamed or told a joke about, run into the corner and act like a victim. I did it by being stronger, by not holding the victim card, and by letting my results speak for themselves. And the best way we can do it is how we're doing it at OSTC. We're hiring irregardless. We're hiring on talent, irregardless of who you are, what you look like, where you're from, what your skin color is, what your sexual orientation is, what your gender is. And what we've realized here, and we've got a very diverse executive team, and what we've realized here is that it produces more robust discussions because we don't have groupthink. And groupthink was very, very dangerous, and you could argue led us strongly into the financial crisis. So I think diversity and inclusion have many, many positive benefits. But at the same time, we don't need to go around and tell everyone that we are a non-public company. And I'm going to tell you right now, and we're already compliant with NASDAQ's board diversity rules, already well compliant with those board diversity rules. And we're compliant prior to those rules being published. So if you want to go ahead and mandate it, like I know that California has mandated it and other states are starting to do that now, fine. I think it's a very sad state of a company, though, that doesn't know that isn't naturally diverse and inclusive. To me, that's just a state of mind that I can't comprehend.
Yeah, no, I'm with you there. I'm totally with you altogether. I don't see why people don't want to be diverse in the first place, because it opens you up to new clients and new ways of doing business and just new ways of thinking about stuff and gives you a more interesting discussion. And that does blend a better and more interesting company. On which diversity note, let me add that tomorrow evening at 5 p.m. London time, you can get Positivity Hacks delivered by Mrs. Young with Woman on It, who will be talking about more diversity and related topics, as always, in the IT frame. Now, Peter, I mean, we're here this evening with Peter Lenardos, he's the CFO of OSTC. OSTC are one of those companies you've never heard of, but they're a profits powerhouse. They are a proprietary trading, market-making company set up by a group of great guys who, gosh, at one point in time, I used to know from the life floor in a previous life, in a previous era. In the analog world that we were all in. And good luck. I mean, OSTC, you've built an amazing business altogether over time. We've got a question for you, actually. Trixie Lopez has come in, and good to hear from you this evening, Trixie. Thanks for the message. What was the most difficult part of transitioning from being an analyst to the C-suite, Peter?
Now, that's a great question, because when I transitioned, I was from a global exchange analyst in London to become the CFO of a publicly listed company in Stockholm, of a fintech company that was providing technology to exchange groups on 6 continents. The transition to me from analyst to CFO was not that daunting. Where the daunting challenge was for me was going from CFO to CEO, which happened just 6 weeks after my appointment as CFO. And that was very daunting because it was all-consuming. And I thought, what the hell is this gay American man doing as CEO of a publicly listed company in Stockholm and traveling around the world once a month? And sometimes in my hotel room in Stockholm, and that's where I lived, is in a hotel in Stockholm, is I would speak to myself in the mirror, kind of like those old skits from Saturday Night Live, those Stuart Smalley skits, saying that you can do it. And I realized that a lot of my strategy, which created record profitability at Cinnober and a 74% increase in the share price and sold to NASDAQ for $220 million, was based on one key thing: common sense. And 8 days after my appointment as CEO, I spoke at a Nordic conference, also in Stockholm, where I laid out my vision for restructuring Cinnober. And some woman in the back of the room asked a question, and she said, "Well, that's very interesting, and that's a brilliant strategy, and I just wanted to know, where did you learn that?" And I told her I went to CEO school, and the whole room laughed. And I said, "I'm just kidding, of course. But isn't the strategy that I just told you to only focus on your core products, to invest in them, to promote yourself, to spend less than you take in, to things like this, to focus on profitability, focus on balance sheet strength? Isn't that common sense?" So it was fun, but it was very I would say all-consuming. But I've always been obsessed with numbers, and my mother tells me since I was a child, my first words weren't mama or food; they were 1, 2, 3. So I'm naturally a numbers person. So I found it's a good question you had, Trixie, making the move to the C-suite easier than I anticipated, but making the move within the C-suite a lot more difficult than I anticipated.
That's very interesting, because I mean that was quite the move to Cinnober, because you want to be CFO, but also you suddenly jumped into a very different culture. I mean, Scandinavian business. And what was that like? I mean, that surely, if you look back now, was itself a culture shock parallel to being CFO.
I had been in Stockholm, Sweden, a grand total of 1 time before I spent the majority of my life there for 15 months. That one time was at the Ice Hotel north of the Arctic Circle. So I didn't really know much about Nordic culture. And there was that culture shock to me, and I'm sure to them, a loud, opinionated American who also wanted to do the right thing. We had a great time. I will tell you that going up to Umeå in central Sweden, where we had a tech hub, were some of my best trips. Where in the winter the sun didn't rise, in the summer it didn't set, and those people were brilliant and incredibly hardworking. And I've got a lot of respect for the people that I work with at Cinnober, and I would say quality people, very smart people. They get on with their job. They maybe have some different views on life that I do, but at the same time, they want to do the right thing. They wanted to work hard for their customer, and I think they took a lot of pride in their work, and I respected that. But there was a bigger culture shock. That was quite a shock to me at the beginning. Yes.
Yeah, I mean, it was quite a culture shock, and the ability to manage to get on a plane and travel for an hour and a half and still be in Sweden between Stockholm and Umeå, and you were going basically due north. And I have to say here, I've got to actually offer also the wondrous insight that for those who don't know, the Umeå facility of Cinnober was actually originally opened, and the ribbon was cut by an august celebrity of the parish, which was
Patrick
me a number of years ago, and it was a joy. What an incredible place.
I remember Patrick walking around the Umeå office. It was dark. It could have been noon for all I know. It could have been winter. And here I came across a picture of none other than Patrick Young. And I remember sending you a WhatsApp message right away with a picture saying, I'm in my office in Umeå, and who do I see? Patrick Young. Yep. It was unbelievable seeing your picture on the wall. But
it was a spectacular time. It was a spectacular facility. And indeed, you can see the same thinking going back to Adina Friedman and Verifin, because obviously having your developers in somewhere like Umeå, great university town, the idea of putting your developers in Nova Scotia. If you're the sort of person who wants to live in Nova Scotia, then you're not the sort of person who's going to end up wanting to move to Toronto, let alone London, most of the time.
Correct. And, and I think with Umeå, the one thing that Nils Robert Persson, the then chairman of Cinnober, did was, where is there a strong university link? And the thing that shocks me about Umeå to this day is that they've got all the key companies up there, from Microsoft to everyone on down, establishing a tech presence there because of the people that are fed to them for a very credible university. Who then, as you correctly stated, do not want to move, much less to London, not even to Stockholm. They enjoy their life up there. And I said we had some really great nights out. And, one of them I remembered, I didn't even know I had a limit on my credit card. And waking up in my suit after the tech team took me out, fantastic night, at 7 o'clock in the morning, to a call from American Express asking, wanted to do fraud checks on my card. And I said, no, that was certainly us. Those are legitimate charges. And, just a really quality, great group of people. I couldn't keep up with them drinking, that was for sure. But they always took me out for a good time. And there are a lot of people that I still respect to this day.
It's a fabulous experience altogether. So we're into the last really 4 or 5 minutes here of the discussion today, Peter. Tell me a little bit about, how do you see OSTC developing in the near future? Because that's a very exciting business.
It is exciting, and I would say that we've got a strategic pivot going on to education and educational solutions. We've made some acquisitions. And OSTC, since its founding in 2005, has always been in the education arena, educating not only our traders, but educating people at the exchanges that we partner with, ICE and CME, and others, helping to educate people to trade their products. So what we've done is we've made some acquisitions there to beef up our educational offering and to work with, really fantastic global companies, from large banks and hedge funds that we would all know, from Citadel and the lots, all the way on down to really take what we've learned in trading our own people in 5 countries around the world to training, new starts and people as they progress in their career. So I would say that what you're going to see from OSTC going forward is a more diversified business, not only on the product side, meaning offering educational solutions internally and more importantly, externally, but also diversified on the trading side as well. We're very good at mean reversion, and that can be difficult when there is no mean to revert to. So we've diversified and are diversifying into algorithmic trading and into global macro trading. And one thing that really impresses me is that a lot of people, when they think trading, think it's all going to be taken over by computers. Well, some of it is, not all of it is. And where we excel is in the human side of giving local access to global markets. So our trading hubs are not in London, New York, Hong Kong, Singapore. They're scattered throughout Poland, throughout Russia, India, China. We've been in talks in Africa about going to Ghana as well. And again, doing these partnerships with universities, with governments that want their people employed, to then us say, we will train them, we will educate them, we will employ some of them, and we will help develop your educational center. So I think what we're doing here is quite exciting, and I'm thrilled to be along for it. I've always been obsessed with capital markets, and we trade solely in the futures markets, the listed futures markets, and that's something that I know quite well. But I'm obsessed with markets, and I'm obsessed with my job, and I work with very talented people, from the founders, shareholders, to Lee Hodgkinson, to the rest of the team that Lee has assembled, and I'm absolutely thrilled to be along for this exciting journey.
So, Peter, the final question then of the show, we ask traditionally these days, where do you think the capital market revolution goes next?
Oh dear. I'm going to tell you one thing that has really surprised me is this decentralization of finance. Because do we not want to be too big to fail with the efficiencies of centralized finance and central clearing, as we all know, are massive. And I remember Jamie Dimon writing a shareholder letter complaining about being in 83 different clearinghouses, his business, not because it was expensive to do so, because it was collateral inefficient. Where is the capital markets revolution going to go? I'm very pleased with the retail revolution. Very, very pleased the pandemic has brought power to the people. So the institutions don't rule the markets. The retail is a force to be reckoned with. I think our market hours are antiquated. The U.S. Markets are barely open. I really don't understand that. And I know institutions want consolidated hours for greater liquidity. But the one thing that still confuses me, when you look at even something like cryptocurrencies and Bitcoin, is it's very decentralized. So getting a legitimate price on Bitcoin is very difficult to do because of the decentralization. I think that needs to end. But where it's going, Patrick, in my opinion, is maybe to a better place. And this we can conclude with a few of the things that we discussed. Large banks here, I don't think are going to any longer, rule the roost. There is power to the people. They do have toxic cultures. There are alternatives to careers in banking. And look at these big payment platforms are getting massive amounts of power now. And that's a very hot area. In another area, Patrick, people think that, everything's been done. And then crypto came and we said, okay, well, that hasn't been done. Well, what about the new frontier of ESG? What about defining that? What about dedicated exchanges? What about someone, instead of saying you're ESG compliant actually giving you a rating, an independent rating, on how they perceive your ESG attributes or your green attributes. So what I would sit here and say is, where's the capital markets revolution going? I don't know if we're going to be centralized or decentralized. I do that power is going to be more broad-based, to the people, more competition for banks, fees coming down. But I think that being a specialist, whether it's in crypto, decentralization, in centralization, in ESG, in green attributes, is always going to be in hot demand. And I think what we have now is a lot of opinions, but what we need is someone with the expertise. And I think that's the new frontier.
Peter Lenardos, the view from the C-suite, that's been electrifying. You talked about collateral inefficiency just in your last remarks, and I certainly believe this has been a very efficient use of mental collateral over the course of just on 60 minutes that we've gone through. As you ranged through a whole series of topics, you started your career, as you mentioned, by auditing. You were viewing business in the rear view mirror, and you've now gone full circle to being way ahead at the frontier, the bleeding edges of finance. Thank you so much for not sharing any controversial views and things like that. You've been very modest. Research was consistently wrong, consistently late, consistently consensus, and consistently positive. Research was not fit for purpose, you remarked. Well, that's certainly something which we love, the idea of your direct opinions, which is absolutely useful. The bar of what constitutes an ESG rating is sometimes sickeningly low. Whether it's going to be decentralized or centralized, certainly the good thing is we're going to be back here in a centralized part of the ethosphere, not from beautiful by nature Providencialis and the Turks and Caicos Islands. I'm afraid next week we're going to be back in Valletta in Malta. We're looking forward to our next special guest. We're going to be inside the Zagreb Stock Exchange, looking at the pulsating excitement of Southeastern Europe with their CEO, Dr. Ivana Gazic. I'm really looking forward to that show. It only remains for me to say thank you very much to our various commenters this evening. We had Les Calvert, David Froggatt, Peter Secon, Simon Hocko, Amalpreet Singh, Trixie Lopez. Peter Lenardos, you've talked about all manner of things, including the concept of whether or not we should be looking at perhaps opening up a better way to relate cryptocurrency with legacy financial markets. As an executive director of Valerian Blockchain, I have to say, well, maybe there's a possibility for a bridge there. Your career has been absolutely scintillating so far. We're looking forward to catching up with you again in the near future on IPO-VID as you further expand OSTC and you enjoy your exciting trip through the C-suite. Ladies and gentlemen, this has been IPO-VID 44 with myself, Patrick L. Young. I wish you a great week in life, blockchain, and of course, the parish of markets. We'll be in Exchange Invest every day, producing the news that's going on in the hotbed of exchanges, whether centralized or decentralized. Be back here. We will be back, I hope, on the same time zone. So it should be 1 o'clock Eastern and indeed 7 p.m. Central European time. Peter Lenardos, thank you very much. It's been a great show. Good night, ladies and gentlemen.